This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade FOREX Report.
This is the Forex Report on a Wednesday. Jack Lott on the James Diggs Financial Network. The U.S. dollar is still on shaky ground today, but many of its major counterparts seem to be just a little bit hesitant in attempting to revisit old highs too quickly. Currencies such as the pound and euro both tried to remove key resistance levels this morning, but ultimately were unable to hold on. We've seen a little late-day pop in the buck, giving it some 40 pips on relief against the European currencies and a few less against the commodity currencies. The only major that doesn't fall into either of those groups is the yen, which is still under fire in the broad market, including against the dollar. Japanese economy is not very soft now, but could be in trouble if a U.S. recession sets in. Furthermore, there are no signs of inflation, which means rates probably are on hold. The BOJ is highly unlikely to hike rates again, and some critics say that the bank should not have moved rates to 0.5%, but rather left them at zero. It seems as though the yen's only hope to recover in the near future is another scare in credit markets to send traders running from risk. On the technical side, things have been a mess for at least a week now. Whether we're looking at daily or intraday charts, many pairs just can't seem to hold a steady direction for any length of time. Even very strong technical signals are failing to follow through, and we've seen a great deal of sudden reversals. While some of the blame can be placed on events like non-farm payrolls last week and yesterday's FOMC minutes release, it could be that the market is exhausted of selling dollars. Many strategists believe that the dollar will recover at least a few percent in most pairs, which is the equivalent of hundreds of pips or more. As we started in an update today, so much bad news has been priced in that we may need absolutely horrific data to continue on with that selling. But last but not least, we must pay attention to the jawboning going on around the world about the dollar's weakness. Of course, even jawboning can push traders either way. Sometimes traders heed the caution, other times they simply want to test authority. So stay on your toes. It's bound to be a wild ride all the way through U.S. retail sales on Friday morning. And that's the Forex Report. I'm Jack Lott on the James Diggs Financial Network.